Hello guys, welcome to another in-depth lesson on CRT. Right, CRT simply stands for candle range theory. Okay, so just a brief introduction of where this concept came from. Like it is a topic or concept that has been trending on X, and which was brought to the population by Romeo. So all credit is going to Romeo. Is on Twitter, I think, and so on Telegram too. So I'm going to be keeping everything simple, and I believe that this will be the best video you will ever watch that concerns CRT or candle range theory. So I'll keep it very simple. I will not complicate anything, and it's going to be a very short lesson, right? So now what's all about this concept? This concept simply gives us this information that every candle that we see in the market is a range, right? And first and foremost, also, you need to have an idea of how the market moves. The market moves from liquidity to another liquidity. So when we say every candle is a range, this simply means let me draw that out. All right, so we have a candlestick like this. All right, now we have the high of that candle, and then we have the low of the candle. So this candle alone is a range. All right, so this is the range high, and then this is the range low of this candle. So this is a CRT candle, and then this is the CRT candle low, and this is the high of the CRT candle. So what is another thing to look out for when you are looking at CRT? Once you have identified that every candle is a range, then now the next thing to put in mind is that when the market clears out external range liquidity, it also goes back to clear the opposite side of the liquidity. This means that if the market clears out, all right, this high, all right, then we expect it to go down and clear the range low as well. All right, now this is simply just like price grabbing internal range liquidity and then going to get external range liquidity. Do you understand? So it is not quite something new, but it is just trying to refine things and make things more easy. All right, so the market grabs internal and then it goes for external range liquidity. That's just simply how the CRT concept works. And I think we have been talking about this all the time. I keep on telling you that the market books from internal range liquidity to external range liquidity. So this CRT is just a more precise way of looking at price and how it's going to be delivered. Now, knowing that every candle is a range, it doesn't just mean that you're going to meet every candle randomly anywhere on the charts and then it's going to become your CRT candle. No. Now, if you're expecting price to give you a CRT movement on a candle like this, then you expect price to push this liquidity, all right, to push the high of the CRT into some key level, all right, or into some liquidity area before you expect price to go to the opposite side of the CRT candle. Right now, this can also be the opposite. You can have a candle like this, suppose it's a bearish candle, and then what happens, price comes and then grabs this is the range low, right, which is the CRT low, and then this is the CRT high. So price now opens the next candle and then it does something like this. Now the next candle opens, all right, and it trades like this. Maybe tries to close let me put this so that, okay, the next candle opens like this, trades up, and then it takes the low of the previous candle. So it takes the low of the CRT candle. Then now the next candle opens and then it goes higher to target the high of the CRT candle. So this is just mainly how the CRT works. It can actually be 4 candles, all right, within the range of this CRT candle. This is our CRT candle here, this one. All right, this is the candle we are working on its range. So you could see that the next candle open took out the range low of the CRT candle. Now this range low like this, taking it out, you should make sure it is being taken out into a key level or into a drawn liquidity, right? So that you now, because this will not be like internal range liquidity, and then price will then start to push external range liquidity. Let me do a proper draw. Let me draw another one again before we look for examples on the chart. So now suppose that we see price moving, we have a range like this, right? So price is actually going down. All right, price is going down, and then we have, let's just say we have a fair value gap sitting around this area. We have a fair value gap sitting here, and then the next candle opens like this, and then this is how it trades. Right now we have a fair value gap sitting above this candle. Right, this is our fair value gap right here. So in this case, at this point, we have this candle, which is going to be our CRT candle. All right, this candle is our CRT candle, which means that we are dealing with the range of this candle. We are dealing with this range low. This is our CRT low, and then this is our CRT high. All right, now this is our CRT low and this is our CRT high. This is our range candle. This is the current candle that has been formed at the moment. So now, since prices is going down, what we're expecting, let's say our draw on liquidity is down, right? We're having a bearish draw on liquidity. So what we are going to do is this is how we have this guy here. Okay, so this is our fair value gap. So now what we want to see is price trading back to internal range liquidity to then do what? Target external range liquidity. It's that simple, right? So this is our external range liquidity here, and then this is our internal range liquidity in the form of a fair value gap, and then this is our external range liquidity in the form of sell stops. Right now, this candle closes back bullish. Let's say it closes bullish. Let me just wipe this and then make it a bullish candle so that you will look okay. Let's make it a bullish candle. All right, so we have a bullish candle right here. It opens and then it trades back to somewhere, and then it creates this high, and then it creates this low. All right, so we have our CRT low and we have our CRT high. Remember, we're having a fair value gap right up here, right? So now the next candle opens like this. Okay, the next candle opens where this bullish candle closed, and then let's say it trades down a little. But now what happens? It takes the high of the CRT candle into the fair value gap, into the internal range liquidity, and then it closes below. It closes below, all right? It closes below the high of the fair value. It closes below the high of the CRT candle. All right. Now this means that first, price has grabbed liquidity here. Price has grabbed internal range liquidity, also taking the high of the previous candle. All right, this is our CRT candle high that has been raided. So at this point now, we are more confident that price is going to grab this CRT candle low, which is also standing now as what? External range liquidity. All right, so once price has grabbed this high and it has closed below it, the next day, if price closed below like this, then we are going to be looking for sell setups now to expect lower prices to target this low down here. So the next day comes up, and then we expect price to do something like this. All right, now the moment price trades here, you can start to look for sell setups. All right, the moment we have this candle opening. So this alone here is our CRT. Okay, this is our CRT candle, this one. That's our CRT candle, this one. All right, and then this was the CRT high, and then this is our CRT low that has been quashed. All right, so it is, the explanation is small of like 3 candles, but it can actually be 4. That means the moment price takes the high, let's say this is our candles high, this is our candles high, and this is our candles low. Right now, if we are bullish, let's say we have some form of internal range liquidity down here, right, and then we are bullish, so we can expect the next candle, if it opens, maybe sometimes it might not take the CRT candles low, maybe even the third one will not take, then the fourth one now grabs what? The CRT candles low, and then it goes back to close somewhere. Then we expect the fifth candle to then continue to the upside, right? I think that makes sense, right? So candle range theory is simply just that we are having a range and we are expecting a tortoise to happen. All right, so it's just like price is top hunting this high, which is simply a total soap the more you go down to a lower time frame. So I'm going to try to explain this again now using the lower time frame. So we have this candle. All right, we have this candle. This is our CRT candle. Now our overall direction is bearish, right? Our overall direction is bearish, so which means that we have this to be our CRT high, and then we have this to be our CRT low. Let's say that this is the daily time frame. This is the daily candle. Right now what happens is that the next day opens, right? The next day is going to open somewhere here, all right, and then we expect price to trade above the previous candle's high, grabbing the CRT high, all right, and which is also taking out liquidity. And what we expect now is for price to sell off to grab the CRT low. All right, now this is where we are going to start looking for sells when it comes to lower time frame. Okay, I don't just want to complicate this, but make sure also you need to understand that this type of entries you are going to be looking at, you're going to be using time and price. I think I've made a lot of lessons on that concerning time and price, how to get your entries based on time, right? So if there are more complications on that, you can just leave them on the comment section and I'll make a more clearer video on how to get your entries based on timing, right? So I don't want this video to be long. I'm just trying to explain the concept of CRT to you. So like I said earlier, it is said that every candle is a range, and the concept of having a total soap simply means that price will have to stop hunt either side of that CRT candle, right? So it can actually happen that even though we are bullish, price can first of all stop hunt the CRT high and still comes back to stop hunt the CRT low before it continues higher. It depends what is down here. If there's some liquidity that has not been raided here, price can stop hunt the CRT high, and then we start targeting price to come to the CRT low before we expect more higher prices. Okay, so let's look for examples to make this video shorter. Right now, currently we having that same CRT now on Euro USD, right? This is even the one that prompted me to make this video for you guys. So we have this candle right here. Okay, this is a candle that we have here, and then this is the high of the candle. So this is the recent high that we're having here, which we could say that it is our external range liquidity. All right, now if this candle is our external range liquidity, we also suppose that this candle now is our CRT candle. Is our CRT candle, which is what? Which is also our CRT high, right? That's also our CRT high. So we're having an external range liquidity in the form of buy stops, and it's also our CRT high. Then now if this candle here is our CRT candle, this is the range we are trading within, right? We are trading within the range of this candle. That's why we're taking it as our total, as our CRT candle. So here down here is going to be our CRT low. Okay, down here is our CRT low. That's the low of the CRT. Now I think I told you that for price to take either side of the CRT, you need to understand where it's taking, what is happening below or above that candle where you are expecting a stop hunt or total soap of the CRT into. Right, so which means that here we had a fair value gap here, very nice one, and even at both this point here there was a volume gap, so you could see price did not even try to close below that volume gap. So we had a fair value gap here which made price to trade into it. So we are having a total soap of the CRT low into a fair value gap, which is a key level, right? So this fair value gap also here is standing as our internal range liquidity. All right, so this is our internal range liquidity, this fair value gap. So this simply means that price was coming back for internal range liquidity to then continue back to external range liquidity. I keep telling you, this is how the market books, keeping it very basics, okay? Just sticking with the basics, right? the market grabs internal and it goes for external. It grabs internal and then it goes for external. And now looking at it with the eyes of the CRT will make it a little bit more precise to you to know which candle you expect to be pouched as internal range liquidity, to tap into the internal range liquidity. Right now you could see these two candles were still sitting within the range of this candle. So the moment price takes the low of this candle, you can say now, okay, our CRT low has been taken. Now all the way right from here, we're going to start looking to getting long. So I think if you're in the community, you notice that I said day before that we're expecting higher prices now, especially when we're looking at the dollar index. The dollar index gave us an SMT as well, and looking at the close of the previous day here, which was Monday, he gave us more insights that Tuesday will likely continue higher. And I think we got some very nice entries at this point, right, with this expansion that happened here. So overall, we're expecting price now to go clear the CRT high. This is more of just being certain that price is going to clear the CRT high, which is to confirm the CRT concept, right? But we also know that it's our external range liquidity. All right, now also if we try to look down here, before we had this heavy push to the upside, we also had a CRT movement here. All right, you could also notice that price was trading within the range of this huge candle here. Okay, it is even more good on the weekly time frame, but let's just work with this one on the daily. Now price was working within the range of this candle, and then I was expecting price to stop hunt this low. Now here is the trick. Remember I said that if price is clearing your CRT low or CRT high, it should be into a key level or a liquidity zone, right? So this means that the fact that price took out this low here, all right, if you're trading CRT blindly, you will start to look for buying opportunities, right, the next day. Though price did not go higher, it was just to fill this fair value gap and then sell more, right? Now why did this CRT not came up right up to this point? Why did it not continue right up? Now this is simply the trick. The CRT low that was taken, price did not tap on any liquidity area. All right, so this is very important. It is just like price giving a stop on to create more inducement, because what happened, we were expecting price to do what, to come down to this fair value gap right here. Okay, we had a very nice fair value gap here that we're expecting price to come down to, and price did not. All right, price did not at the moment. So this was not supposed to be a valid total soap of the CRT. This candle here was a valid total soap of the CRT. All right, so this was the moment that the moment price took out the CRT, the next day we were trying to look for price, knowing that price is like almost guaranteed that it's going to be taking this high and more. All right, but remember this CRT grab here, it did not grab any liquidity here. You could not see any key point that price was acting here. So which means that before you are expecting a reversal, you should ask yourself, is price grabbing liquidity? If let's say this was that could have taken some old low, right? This was a total soap to an old low. It could be different. That's also external range liquidity. But in this case, we had an internal range liquidity that was sitting intact, and we're expecting price to come down to it before we start buying, and then identifying a CRT candle where we could work with it as concerning our range. Then it would have been more precise, and for us to have more confidence as to where price is going to target our next right? So also there was even on the GBP USD, all right, we also have this on GBP USD, and I think on GBS22 was also, we also had a very, very good CRT candle. Now looking at this particular area here, you could also notice that what happened, we had a very nice order block down here. We had a very nice order block candle right here, and then we had this candle, the candle that tapped into this order block. This became our range, right? So we are in our CRT candle here. So this is our CRT candle, and it is also our CRT high. That's also our CRT high. So which means that whatever, if we start to get longs, then we'll target this high, right, to be our draw on liquidity. So what happens is that price took out the CRT low, okay, inside our key level. All right, inside our key level, price took out CRT low in our key level. Okay, so we had a stop point or a total soap inside our key level, and the moment this happened and we start seeing price pushing higher, especially the close of this candle, which is also a flagship reversal, it gives you more confidence that price is going to continue higher, right? I think that makes sense, right? And also we had a contraction. You remember I keep telling you after a contraction comes an expansion. These are just simple basic concepts. You don't have to overcomplicate them. All right, just reading price here, knowing that price has reacted to a key level, and then knowing that you had a CRT candle, a candle that has a range, and then price took the liquidity of that range, and then this will be your target, more of certain that price is going to be coming down up to take this high. I think I pointed this out to one of my colleagues right from this very day, right on Thursday, and it happened yesterday. So it is just as easy as that. You don't have to complicate anything. Make sure you set your key levels intact. Now, I'm not talking about entries because I already made a lesson on entries, how to take your entries based on timing, right? Now, but at this point, like on this day, you would have been expecting to look for buying opportunities. Let's go down to the 15-minute time frame and see if we could have had any entries here to target our CRT high candle, right? So let's see 15 minutes, let's see for 5 minutes and see if we can get any entries. So right here, I think, let's see. Let's see what we have here. Let me just try to play this a little. Okay. All right, so this is our yesterday's candle, and then we had price like this. Okay, so look at this here. This was the low of yesterday, and this was during London session. All right, I think in London session we had a beautiful order block here too, where price came back to it, and then we had a massive push back to the upside. But most of the time, after seeing this displacement, knowing that you are expecting higher prices, you would have engaged around the 50% of this fair value gap, or you coincided with this breaker right here, and then you get your entry around this point, right? And once you enter this point, you target your higher prices. It's that simple. And if you would have started right from down here, you would have gotten your entries as well, right? So it is very just simple, but make sure that your entries are based on timing, right? You're based on timing. It doesn't mean that the market will not give you entries at any time. All right, because like you can see, even when the market opens, we did not even create a low. We just started moving higher, right? You would have been expecting price to clear some lows, but it did not. So this happens when the market is on a trending day, right? Price can just start moving to one particular direction. So let's check DXY and see if we can also see something like this CRT. All right, so yeah, this is another CRT here that happened on euro, on the dollar index. All right, so this is our CRT candle, and then price took the CRT high into what? Into the fair value gap, which is the form of internal range liquidity. And then when it came back and closed below the range of the candle, we're not more expecting higher prices, but regardless, we were trying to see, actually we were expecting price to maybe move higher a little bit, but the moment price started trading this way, all right, like you see, I mentioned here bearish contraction. The moment price took previous days high here and then gave us this type of a close, which is a bearish contraction, when you already that the next day will be an expansion to the downside. So this is just very simple, trying to put everything based on the basics, right? It is not about complicating anything. It's not about trying to figure out some holy grail. The holy grail that you have here is your mind. All right, just to be able to execute the basics with good risk management and a sound psychology, you are going to outperform all these people that are running from concept to concept looking for a new holy grail, new strategy to start looking at. So keep it basic, keep it on the basics level, right? Just focus on the basics. If you're trading support and resistance, stick to just the basics of it. If you're trading smart money concepts, stick to the basics. The market will always live from internal to external, from external to internal. It's left to you now to be able to know what is your internal range liquidity. You can see that before the market came right down to this point, what happened? It went back for this internal range liquidity in the form of this fair value gap, right? It went for this internal range liquidity in the form of this fair value gap. And before that even happened, we had a range here, which is going to be our CRT candle, and then price took the high of it, closed bearish. The next day, start looking for selling opportunities, right? If we go to the weekly time frame, we're going to see that even more clearer. That's just internal to external, internal to external, internal to external. That's just how the market moves all the time. It is only left for you now to know how to determine your internal range liquidity, and I've made a lot of lessons on that, especially on internal order flow. Know where price is going, which phase you are currently at. Is price reacting on the internal range liquidity, or is price being drawn to the internal range liquidity, or is drawn to external range liquidity? Once you compile these two things, you'll be able to easily know the direction you are expecting price to stop on and then move into. All right, so if you have your drawn liquidity which is to the downside, you will know that, okay, if I draw liquidity is to the downside, if I have a candle like this one here, and then since I'm bearish, I can expect price to give me a CRT, that's take the previous candle's high. All right, now also remember that this taking the previous candle's high should be into some key level, right? This will help you a lot. If you're having a total swap into a key level and then price trying to close below that level like this, like it did here, this will add more confluence to your trade idea. It will make your trade to be more it will increase the probability of your trade. All right, so once you have something down like this, you will know that, okay, the next previous day, once the market opens and tries to trade above, all right, this is where you start to look for your selling setups for price to continue down. And then your first target most of the time is going to be the 50% of the CRT candle, and then the next target will be the CRT low. And if you still have some liquidity down here, you can let the profits to run. All right, you can let the profits to run. So which this means that if we're trading this particular pair here, we would have target 50% of this candle as our CRT, right? Because 50% is most likely guaranteed for price to reach the 50%. All right, so we'll have grabbed our 50%, which is right down here, and then we expect price to then continue to grab the other liquidity to go right down to the external range liquidity, which is in the form of the CRT low. So guys, I don't know if you find this video helpful, or if you see it makes a lot of sense. You can like, share, and if you have any more problems or any more confusion on this very topic, CRT, let me have it on the comment section, and I promise I'm going to make it clearer, and I'll make you understand everything about it. All right, so thank you guys for watching. Please like, subscribe, and God bless you.